And we're probably one of the only projects coming into production in Canada in particular, and coming into production on a rising gold price that mid next year gold could be 3,000. And that's a perfect time now. We'll get an uplift, as you know, from moving from explorer to developer and then to producer. And that's a perfect time to get in on the story and follow the story as we're successful to ramp up the project.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz, bringing you a major update from our sponsor, West Red Lake Gold Mines, and CEO President Shane Williams with us now. Shane, appreciate you coming on now. I know it's the end of the year. You've got so many things going on, and you're trying to wrap things up. Your PFS is coming out. Can you just bring us up to date on the mine restart?
Yeah. As we get towards the back end of the year, we're really focused on, getting ready for that restart. There's a lot of parallel activities. We just had a press. We're doing a kind of a monthly now construction update. We released another one this morning. People can see the level of intensity. There's parallel activities ongoing. So we're really coming to the peak of that restart activities now as we get in towards Christmas and into the new year. We've been doing, obviously, most of this year, we've done a lot of drilling, a lot of definition. We went and got a lot of projects, capital projects, and they're all really coming together now towards the back end of the year and into the first quarter. So, yeah, busy and exciting times, West Red Lake.
Can you give us an approximate date here, not to pin you down, and I don't want you to be over-promise and not be able to come through, but give us an approximate date range.
Yeah, so the plan is towards the middle of next year. The middle of next year, Q1, we have finished off all our capital projects. We're starting some test mining to do some test mining, etc., on a bulk sample. And then once they're in place, our PFS is coming out in early January, and so those three activities together to set us up nicely for a restart, which would be into middle to the back end of next year, 2025.
So you've done this before. This is nothing new for you. You're not learning on the job here, but every mine has its own particular challenges, its own things that make you want to pull out your hair. What have the challenges been here, the biggest challenges to you?
Yeah, I've done this 5 times, Kerry. This is my 5th mine restart. So there's been a lot of it. And you're right, everyone has his own unique challenges. For me, we've been lucky. A lot of it is getting understanding of learning the lessons of the previous operator. That's key. A lot of the it took a long time to get into the detail and understand what were the key boxes that needed to be addressed for us to be successful. And that's taken quite a while. Majority of it was around that drilling, understanding of the ore body, getting that level of definition. So that's really been the technical challenge. Everything else was really reasonably okay. They had a good mill, they have a good infrastructure on site, but it was really that understanding of the ore body and spending the time and the detailed effort to really understand that and now get the mining kind of going. They've been the real technical challenges as well in the area on the project.
So the devil's always in the details, right?
It's always in the detail. I compare it to like an orchestra. There's a lot of different moving parts and individual things have to come together at the right time to be successful on a mine.
And you got to be watching all those players, make sure that they're all on the same page, playing the same tune, right?
Yeah, they all have to be playing the same tune and they all have to be in sync, so that they all come together. As I said, we have a number of capital projects. We have underground development, we have underground drilling. Obviously, we've financing, raising the financing in parallel, and it all really has to come together to that mid-next year sort of restart process.
And right there. And in the meantime, you haven't been standing still. You're still doing exploration work and got a nice intersect on the upper 8 target.
Yeah, I think that's a story that, we focused on this year around the restart, the de-risking, etc. But I think that's a story that we're going to push a little bit more. There's huge exploration upside associated with Madsen. It's never really been done. And so this was one area that the team focused on, this upper 8. As people probably are aware of, the lower 8 was a very high-grade zone within Red Lake and within the Madsen Mine. And the team have found in that there are a number of these high-grade zones throughout the mine, and one of them is this upper 8 zone. And we've had quite a few good hits there, and the team are continuing to drill. So I expect this to grow. And remember, it's a high-grade part of the ore body. And so high grade makes a big difference in these mines, as your viewers will probably know. And so that makes a big difference from an ounce profile and the ability to grow and push the project larger.
Yeah, I know you got some intersects, 21 plus grams, 52, 23, and they're meaningful.
Yeah, they're meaningful. You get a 25 gram sort of ore body and you're bringing in that material. The Madsen overall is about a 7 gram. You're getting an overall average grade of 10, 11 grams. That's a very high grade mine in Canada today. That'll be up there in the top high grade mines in Canada. And that generates huge cash flow in the current market prices today.
Right. So in the meantime, you mentioned you're finishing up the capital projects here. I think I'd never heard this term before, connection drift, but it makes total sense. So you're kind of unifying the two ramps that are there now, the east and the west. So
yeah, they were kind of operated as individual if you think of it like two individual mines, underground mines, that were kind of operated individually, and ore had to be hauled all the way to surface and then transported across by different trucks across surface trucks. And so the connection of those from an underground perspective opens up huge possibilities. Not only does it allow efficient movement of ore, but it also allows exploration in that area between the two mines. And there's a lot of prospectivity between those two areas that never really had access to get the drills. So I know our team and our mine site team and geo team are very excited about that, the ability to drill those, but also from an efficiency point of view, it does open up a lot of opportunity.
Right. And I saw that there's where the mill is constructed, there appears to be a big target under the mill.
Yeah, there is. There's a lot of targets in that area and in numerous different areas. And this connection drift allows access to some of those areas, allows that to open up those areas and that take those targets close to the infrastructure and close to surface.
So you got your primary crusher in, and that's always a good sign because that always happens towards the end of the process, right before the restart, right?
Yeah, well, it's the first part of the chain of processing. And so, we as I said, in parallel with our de-risking approach, we focused on staged approach. And so the first part of that was we bought that crusher. The previous operator had leased the crusher and they were running with a contractor. We went out and bought that crusher. And now what we're doing is we've commissioned it. We're getting it ready. We're getting it ready for ore. We're testing it. We're getting maintenance in place, all for that planned restart.
So you just did a major financing. So I assume a lot of money in the treasury that can see you through to production.
Yeah, we did an equity raise recently, and we've just also agreed on a preliminary term sheet with a group called Nabari for a debt facility. So between the two of those, that would give us enough of the money to move into free cash flow in the project.
So kind of, I think the market's not really perceiving how close you are to production, how meaningful that production is going to be. What do you say when well, it's the end of the year, there's tax loss selling. We know the whole thing goes on. It's an annual ritual, but maybe it's a good time to be looking at West Red Lake.
Yeah, tax loss selling is a big thing, obviously, in Canada. Stocks come under pressure. But I agree, the market really doesn't know. We've had a number of project restarts in Canada recently. Last year and the year before, but there's very few coming up this year, because gold had been down for a number of years. There wasn't that focus. So into 2025, there's very few restarts. And we're probably one of the only projects coming into production in Canada in particular, and coming into production on a rising gold price that mid next year, gold could be 3,000. And that's a perfect time now we'll get an uplift, as you know, from moving from explorer to produce developer and then to producer. And that's a perfect time to get in on the story and follow the story as we're successful to ramp up the project.
And gold prices have been cooperating. I mean, we hit 2,700, and now we pulled back a little bit, but it's still in a bull trend.
It's still in a bull trend, and particularly for producers, as you know, the big producers now are making lots of free cash flow. They're producing for AISCs of 1,500. Gold is at 2,600. There's a lot of margin still there. So as we move into that production phase, there's also going to be a lot of margin for ourselves at the lower end of the production, and that will generate lots of cash flow for WRLG shareholders.
For sure. And what annual production? Do you have any guesses on
annual
that?
production will be around 70,000 ounces a year. 70,000 ounces a year, producing AISC of around 1,400. That's a lot of margin in today's gold price environment.
That's almost a 50% margin there.
It's a 50% margin. And when you take a 50% margin on free cash flow and do the metrics, we're very undervalued for what potentially in 6 or 8 months could be a completely different story.
Yeah, especially ounces in the ground here. It's very meaningful when you're close to production, right?
Very meaningful. We'll have over 1.7 million ounces of reserve at high grade, 7 grams sort of material. There's not many mines in Canada that have that high grade underground mines.
That's for sure. Well, Shane, thank you for the update. Really appreciate your taking time out from this busy time of year. I suggest you go over to westredlakegold.com, sign up for notifications, ticker symbols WLRGF in the US and WRLG in Canada. We'll be touching base with you in the coming months. Shane, happy and healthy to you and your family.
Excellent. Thank you very much, Kerry, and I look forward to it. Thank you.
The Financial Survival Network.